I see some questions in the chat room. I'm seeing a lot. Yeah, the question that I asked earlier, I can see that my people have answered it. These are most of my students. Price action. When I asked which one is more important, is it the trend line or the price action? And I'm seeing most people here have answered price action. Price action. Price action. Price action. Price action. So good answer, guys. Good answer. Yeah, it's price action. Because why? Why is it price action? Because price action is what is going to create the trend line. The trend line cannot create the price action. So we need to follow the price action before we even come and say whatever pattern is forming. So I'm seeing the Ian, Dirangu, Kate, Munene, Jadel, Eugene, Naomi, Gerald, Irene, all of you, Clinton, most of you guys said price action. So kudos. Clinton here saying price action trend lines are subjective to each individual. Good point. Good point, Clinton. Price action can be seen by everyone. Trend line subjective to everyone. Good answer. I'm even saying Peter did the same thing. This is what I was looking for, the extra info. So good one, Clinton. Very correct. This is why I like teamwork. Teamwork makes the dream work. So good point. Apologies. That's Alvin. Oh, no problem. Yeah, I'm glad you removed it. Kindly, can you analyze BTC? That's Leonard James. So you know, when somebody tells me to analyze a certain pair, when someone asks me what am I looking at? Because I'm seeing here people asking me, look at Aussie dollar, analyze BTC. Are you looking for signals? If you go to my Twitter handle, CK the oligarch, you can go through it and check it. I cover about this a lot. I can break down the markets. Let's look at it. Let's look at it. Okay. While I explain what I'm trying to say. Okay. If you tell me to look at a certain pattern, even if I tell you, okay, look at this. If I look at Aussie dollar like this, I do my own shenanigan things. Then I tell you the market is going to go down. Will you buy or will you sell? Okay. I remember there's a time, a funny story. There's a student who came to our office. We were in the office when we were back in town, and this student was very new. He was even a foreigner. He had come to the country, and he was saying, it was funny. I was with Ken in the office, and this student was looking at gold, the gold market, and gold had reached a certain point. Then he was saying, man, I'm buying. And that time it was a very high point. Like market had really moved significantly higher and shown a signal for moving back down. And then I was talking to the student, and Ken was just there listening to this student keenly. So immediately Ken heard this student is buying, he sold at that exact time. And the market moved down tremendously. Like, you know, the way gold reached 2000, then strongly dropped back down to 1950. Ken was in that shot. So basically meaning, even if I can show you a basic example of what I'm normally expecting. Someone is asking Aussie dollar. For example, Aussie dollar, I'm normally looking at a basic way of how I look at markets. I look at the daily chart. I want to look at the direction of the trend, okay? You want to be looking at where market is forming impulses. For example, here, look, impulses to the downside. So you can see some impulse here to the downside. There's a significant level here that market is sort of struggling to break, okay? So this is just a rough one. This is not a signal, okay? I'm not telling you buy or sell, but what I'm just looking at. So I want to pay attention with what I've taught you on the key levels, okay? So look, sort of what is happening is sort of what happened here. So you want to be looking at also previously what happened in the markets. Look, market came and broke below. Then we created wicks to the upside. Sort of the same thing that's happening here. Market came, even look here, wicks to the downside, eventually broke. Now we're having here wicks again. You can eventually see a breakout to the upside. Or also you can see a market over here. This wicks is basically showing that the buyers are not as strong as the sellers. And if the market closes like this multiple times, it can cause a very strong sell to the downside. But at the same time, market is always trapping people. It's knowing that people over here are looking to sell. So for me over here, as long as market stays to the downside, you can easily see markets going to the upside. But if you see a significant break, okay, you see this market closed above, you see here markets closed below, you want to be on that direction of the trend, okay? So I'll normally look at that, look for a key level, looking for direction of the trend on the daily. Then I'll come to the 4 hour, look at that level that market is sort of respecting. So here I can see that this market touched here. We're sort of refusing to go to the downside. So it's sort of like creating that ascending triangle, sort of a pattern, okay? Something of the sort. So if market comes and breaks below this trend line, you can see that market can significantly go below. But if it closes above, markets can go above. So basically what I'm telling you, I read the market as it is. I don't try and tell you or try and tell myself that I want markets to go up or down. Okay, so markets can go anywhere. I just read the market, closes above, closes below, certain pattern that I normally trade, then I'll trade that one. And Leonard was asking about BTC. I've not looked at this market for a while. I normally take long-term trades on this one. I'm normally looking at the daily chart. Okay, so as a rule of thumb, remember, we're looking for a lot of buy zones between the 20,000 and the 12,500. We really didn't get to that point. I'm not saying we won't. Markets can still fall to that point, okay? But what I'm normally looking at, if you look here, I'm normally marking my lower lows. Look, this was a top, this was a lower high, lower high, lower high. So basically market is moving lower low, lower high, lower low, lower high, lower low, lower high, lower low. Okay, now I have this green line that I normally tell my students, we normally call it the Dow theory level. Okay, market broke above this level. You can see market sort of came and retested it. I was anticipating it to continue moving to the lower side, but it came and broke above. That's an important factor, okay, especially on the daily chart, which can indicate that market is starting to move to the upside. Okay, so you can see now, what am I waiting for? You can see market sort of dangling here. Remember the key levels, market is always dangling. This is an important level before, acted as a strong support. Okay, support, sort of market dangled around here. That means market will come and play around here now again. Okay, so pay attention to that level. If market plays around, I want to pay attention to two levels. Okay, that level here and this support level, meaning will we break above this level or will we reject it? Okay, if we reject it, we're coming back below. Will we break back below this level or will we reject it again? Okay, so those basically, that's where I am. Market is dangling between 25,000 and 28,000. Pay attention to those two levels. I don't have a significant direction whether market will go up or whether market will go down. So it's in between there. So I go with the step-by-step market. I move with the market as as it is. I read what the market is telling me. So I hope I've helped you guys who are asking me that. So as I finish, Edison was asking, hey Caleb, do you find the bar replay feature to be effective for backtesting? What is your opinion? Is the backtest, which is the best and affordable way to backtest? Yes, for example, if you want to backtest now, you have to pay for TradingView if you want to use the TradingView platform. And I think it costs about $14. They'll add some tax. When you pay for it, if you're familiar with it, you'll see $14, $14.50 or 14 something. And then when you're going to pay, you see some like $1 or $2 tax added. So you can pay for it if you can afford doing that. Some other people, like we're teaching with our students, we normally use a backtester called Soft4FX. I normally share the link. If you want it, you can buy it. But you also have to not use it because that's only for MetaTrader. It's not usable on TradingView. But as a starting off point, you can start with TradingView because it's cheaper to pay with that for 1 month, let's say. But if you want to do in the long term, you can use the Soft4FX and pay for a one-time payment, which can help you accumulate data. But we teach that in our classes and our courses. Okay. Irene was asking, how can we draw a peanut pattern?
What? Bro, what are you talking about, man?
Irene, I don't know what a peanut pattern is. I've never heard of it. That's a new one. I'll actually go and research on that one. Edison, I also feel like trading can be a lonely journey if one does not have a community. It would be amazing if you continue doing this, bro, or is there a way someone can join your community physically? So yeah, we normally have our Discord group where we share patterns, but this is mainly for our students because it's also the patterns that I use, what I've done a lot of years of research on. So I don't just give anyone access to it. We have for our students. So, but for this public group, we'll be doing a lot of this, what I've done today, just sharing a lot of information, which I don't want to keep for myself. So, good point. So, Mike, you ever consider order blocks in your trading, and where do you mark liquidity areas? So, for me, I don't really use order blocks. For me, I normally use what I showed you. Key levels, broken, retest of a certain key levels. I don't know if it incorporates order blocks. Maybe it does to you, I don't know. But I don't pay attention to order blocks. Like I said, many people pay attention to different ways of trading. The ICT method of looking for order blocks. I know it. I don't know it deeply, but I've heard of it. I remember there was a time I said I'll do research on it. I don't think I've gotten time to do so, but I will do so and just understand it more. So Clinton, any office updates? Yes, there's some office updates. I'm actually at the studio here. Our office, if you remember, is just across. So we're still looking to finish sometime in April. We'll do another video like I did last time for our private students and just give you an update of what is going on. But hopefully so far we want to be back online and trading and having you guys over. Like Edison has said, community is important. I don't know how I'll be trading without Ken and Taras and our psychologists. It will be impossible for me to enjoy or even survive in trading because the mental breakdown it can have on you is very heavy. So as I end, Irene is asking, between Bollinger Bands and RSI indicators, which is the best? I used both of these when I was starting out of trading. I did away with all of them. I don't mean that is bad. I don't mean that they are bad patterns or bad indicators, so to say, because RSI, relative strength index, I believe, and Bollinger Bands, looking at those standard deviations and markets bouncing up and down those levels. I don't use any of those, so I can't vote for any. And at the same time, there's no indicator which is better than the other. It depends on how you use the indicator. There's someone who will come and tell you RSI is the worst because it lost money, but on the other side you find someone else is doing it nicely. So it just depends on how you use it. I don't have any idea which one is better than the other. So I see Big Mike saying I really need to join your mentorship tomorrow. I hope these videos help. I enjoy teaching you guys, giving ideas. Also, you guys give me information. Peter is also asking, what do you look as entry confirmation on swing trades? When I'm swing trading, meaning I'm holding trades longer than 1 day, 4 hour candlesticks are my important candlesticks. I won't easily swing trade on something that I entered because of a 1 hour candlestick pattern, unless the market just takes time before it gets to that point. But in the long term, I'm normally just looking 4 hour. Use the 4 hour. For me, 4 hour is significant. Ken doesn't go below even the 4 hour. If you look at Ken, if you come to Ken's class, Ken will teach you he doesn't go below the 4 hour because Ken is also a swing trader. Doesn't go below that. And also for me, I mostly stick to that. So allow me to end it there, guys. I see it's 9:15. It's raining outside. I don't know if you can hear that. I'm mentally tired as well. It's 9 at night. But I enjoyed this. One last question. I see Victor saying thank you, FR. Peter saying, how are you faring with the founded challenge, and advice would you give to someone who has failed the 5 challenges? I understand you, bro. We've gone through this many times. If you go listen to our podcast, Ken's video, my video of how we challenged the challenge, I remember it took us more than 1 year to pass the challenge. That means failing a lot of challenges. But I think we shared a lot of gems there. You can listen to them. Something depending, it's depending with also which funded challenge you're doing, which will offer different advice. For example, FTMO and this other one. I see you've said MFF, pay attention to daily drawdowns. I remember that's what really took me out sometime. Daily drawdown, that 5%, very important. And a image feature because the next day it recalibrates itself. So you're looking at the opening price of the next day. It's not of your account, it's the price. If you're trading profitably, that level has moved. So if market goes back down, it can significantly just hit you out again. So because it wasn't the topic for today, watch our videos. Maybe we might do another session. The 3 of us might do me, Ken, and Taras, and just share with you the challenges and how those funded programs are going. So cool, guys. It's been a good session. Allow me to end it there today. I don't want to be locked up in this building. They might lock me out. I want to get my way home. And see you soon.